Hi everyone, so Pool Corp, as the name suggests, is to do with swimming pools, and they're a serial acquirer, they're a great distributor, and they have this amazing track record. But where is the growth going to come from in the future? Well, you can decide by the end of this video. And for those of you who are looking for the best brokerage platform to use, I use Interactive Brokers, link in the description below. They're the most reputable, they give you access to international markets. I've got demo videos here on the channel if you want to see how it all looks as well. Please check that out. Let's jump into Pool Corp today, and we're going to go through their most recent presentation as it highlights some pretty interesting things, I think. It gives us a good summary of the business anyway. So taking a high-level look at the company, they've got over 200,000 product SKUs across 50 product categories. That is an enormous business. This is a large-scale distributor in everything related with pools. So there's a lot going on here. There's a lot of moving parts in this business. It is a difficult business to run. It has quite high barriers to entry, and there's a lot of relationships that they need to build here. 2,200 different suppliers. Like, this is a complicated operation. But surprisingly, as we'll see, they've been able to grow and compound their value very well over a long period of time. So it's very interesting. They claim they're the number one worldwide distributor of pool-related products. And if we move down to the next slide, the geographic markets, they're about 90% of it's in the States, and then 5% in Europe, and then other is about 5%. And coming from Australia, I know how many pools are in Australia. So if they've only got a small footprint in Australia, there's a lot of room to grow just there specifically. But Southern United States is going to be their key market, as you can see here, 90%. They have a geographic footprint, but this is an American business. Now, on this slide, it talks about the product application spend. This is really important. Maintenance and repair is 60%. So most of their business is actually selling their supplies to tradies and contractors and repair people who go out and do the repairs on the pools and the systems. And most of their products get sold to those people, and only 20% of it is actually in new construction. So most of this business is recurring of nature because it's more in maintenance stuff rather than the new constructions or the upgrades and things like that. So I think that's really important to note, that even if there's like macro issues going to happen in the world, the majority of their business is still on just the maintenance. And if you've got a pool, you've kind of got the responsibility to maintain that. You don't want to see it, if you've got a leak in your pool, you've got to get that fixed. If you've got an issue with the pump, you've got to get that fixed. The whole system needs to work. Otherwise, you get a pool that not only just doesn't look good, it'll go green or something like that, but it could actually cause serious problems to the property. So you kind of have to keep the maintenance up on these things. And I think that's great that the bigger part of their business is to tie it up in this recurring maintenance style revenue. So what we're looking at here is the trends of the overall market, and the installed base of pools is growing steadily. New pools fell off a cliff in the GFC kind of time, but it's starting to pick back up again. Essentially what's happening is that pools that were installed sort of 20, 30 years ago, well, they're aging, and there was a lot of them installed back then. So the trend in the overall demographics of pools as a whole throughout America is aging. Therefore, they're going to need more maintenance and more upkeep, or they're going to have to either dig them out and replace them completely if they want to keep a pool. So there is, I think, generally speaking, a trend moving in the right direction for the company that they're going to have to keep up doing what they're doing. Now, page 9 is where they talk about their own competitive advantages. Now, we can go through each one of these, but I think the only one of real importance here, I'm sure all of them are important, but the one that I think is important is their scale. If they can buy in huge quantities in bulk and have a good distributor having all the different necessary parts for all the different brands of pumps and all the different seals needed and all the different pool related stuff, if they've got the biggest range and can buy them at the best prices, well, that's a huge competitive advantage, just being at scale. And these guys are the clear number one in this space at scale. So now let's look at the more recent financial performance, and this tells a bit of a story. So net sales, for example, in 2021 really shot up high. Margins improved a little as well. Operating margins improved significantly. And then if we look at the earnings per share, it went up very, what was that, 70% or something. All the numbers, return on invested capital, everything has grown really significantly in 2021. And we've got to call that boom time earnings. That is not going to that growth rate and those numbers aren't going to be sustainable. And I would imagine that this will come back down to a more averaged level. And it'll be far easier for us to look at the growth rates from, say, 2016 to 2019, rather than worry about anything to do with the pandemic years and the weirdness that's gone on in the supply chain world from that, and weird psychological stuff that's happened there. I think we just got to return it back to some sort of normalized level. The world's never normal, I guess, but I think that's better than looking at the pandemic years anyway. Now, on this slide, we're going to talk about capital allocation. I really like how they've broken this down nice and clearly for us. So they've said that how they're going to deploy capital is in CapEx, in reinvesting in growth, so maintaining the current operations and growing the business further. So internal uses of their money, and they want to spend 40 to 50 mil a year on that. Acquisitions is part of the strategy. They are a serial acquirer. They have more smaller distributors so they can suck up into their business, and they're looking to spend 25 to 50 mil a year on that. Then there's dividends, which is a pretty large amount there, 150 to 200 million on dividends, and then share repurchases even bigger again. Something I find a bit of an issue is that they're kind of, what if the share price is like really high? Is that share repurchases going to stay at that number and they're buying shares at super high numbers? I don't want to see that. We want to see them buy shares at reduced rates. We want them only giving out dividends if it's feasible. But if they can only spend 40 to 50 mil on CapEx and they can only spend 25 to 50 mil on acquisitions, well then I guess dividends and repurchases is fine. But I don't want that to happen at the sacrifice of growing the business. So on the next slide that I'm showing you is how we can look at the boom time earnings. So what they've done here is they've said organic revenue growth before the boom time, which is the 2020 and 2021 results and their 2022 guidance, their longer term outlook and their prior 5-year history show us a better understanding of the boom time earnings. And it's great that they've already acknowledged that it was a good time and that it's not going to be like that going forward. Organic revenue, they're expecting it to be 6 to 9%, considering it's coming off double digits and some of them in the 20% range. Gross profit margins to be stable at around about 30%, and everything else to be sort of tempered down back to their normalized numbers rather than looking at any sort of boom time. This is going to be really helpful when we get to a valuation point of view. So I'm glad that they're aware of this and they don't expect these boom time earnings to continue. That's cool. Okay, so we've got a bit of a high-level look at the company now. In the next episode, I'm going to dive into management on some of their deals that they've made. We're going to look at some of their metrics. We're going to look at what the growth opportunity looks like. And we're working towards evaluation. So that's where I'm going with this. I hope you're enjoying this so far. This is an interesting business, and I think it's boring for most, but I think you're going to see in the numbers that it's quite interesting. So stay with me on this one, and I'll see you in the next video.